This video will demonstrate how to prepare the journal entries for uncollectible accounts under the allowance method. Blocker Company estimates its uncollectible accounts based on an analysis of receivables. On December 31, a junior accountant prepared the following aging schedule for the company's $88,000 in outstanding receivables. The allowance for doubtful accounts currently has a $210 debit balance. Now, there are two ways to calculate the amount of the adjustment for under the allowance method. One is under the percentage of sales method, and one is under the aging of accounts receivable method. And this is an aging of accounts receivable. So what we've done here is we've separated out the amounts by how long they've been outstanding. They call that the age intervals. And you'll notice that the larger amount is not due, so it's current. And then progressively we have amounts that are up to and including over 90 days past due. The total there is $88,000, and that's meant to tie into the accounts receivable balance. Then the next column is showing the percentage that we're estimating as being an uncollectible. And you'll notice that it greatly increases as you get older. The receivables get older, and that's because basically the way it works usually is the older it is, the less likely you are to collect it. It's like lending a friend a dollar bill. You know, if you lend your buddy $1, if you haven't been paid within 10 days, you know, maybe the chances of not collecting are just 10%, but you get out there to 6 months, you're probably never going to see that dollar again. Then we take that percentage and multiply it by the respective amounts of receivables to get the amount of the estimated uncollectible account. And that, in this case, that it totals up to be $6,288. Number 1 says prepare the adjusting entry to record the company's estimate of uncollectible accounts. Well, we're going to debit bad debt expense by $6,498 and credit the ADA, which is short for allowance for doubtful accounts, $6,498. Now, something we need to point out here is that the $6,498 is not the amount we calculated. We calculated $6,288, but you'll notice I have a notation there that says we want to adjust to the $6,288 credit balance. So beginning debit balance $210 netted with a credit of $64.98 is going to equal $6,288 credit balance. Okay. So in other words, when we're doing it based on an analysis of receivables, we are adjusting we're adjusting to the amount we calculate as the bad debt allowance. We calculated $62.88. We need to take whatever balance we currently have and make the journal entry so that it will adjust it to that $62.88, and that's what we've done here. Next, we prepare the journal entry to write off T. Donaldson $700, J. Kyle $450, and D. Mize $1,000. These are 3 customers we have for which we have receivables, and we are now writing off. And so what we would do then is we would debit the allowance for doubtful accounts. The total of those 3 are $2,150. Then we would credit accounts receivable for each of those dollar amounts, the $700, the $450, and the $1,000. Notice again that we have the last name of the customer behind the AR there, standing for accounts receivable. That's to denote which customer it is, so that when we do our subsidiary ledger and change the balance that customer owes us, we have that information here in the journal entry. Now, similar to situations that can occur, we have a situation where we wrote off the accounts receivable for J. Kyle, and now he's actually paid us $450 that he owed us. Well, we have to reinstate that receivable again. That's accounts receivable Kyle debit and credit allowance for doubtful accounts. So we're taking the amount out of the allowance and putting it into accounts receivable. Remember, allowance for doubtful accounts is a contra asset account, a normal credit balance found in the current assets section of the balance sheet alongside accounts receivable. After we reinstate the receivable, then we debit cash $450 and credit accounts receivable $450. Next it says, what circumstances would cause the allowance for doubtful accounts to have a debit balance prior to adjustment? And if you recall, that's what occurred in this example. It happened to have a $210 debit balance. Well, the actual amount of uncollectible accounts written off in the prior period was greater than the estimate used to record the adjusting entry for bad debts. In other words, allowance started off with a certain amount. Throughout that next year, we wrote off accounts receivable, and when we did it, we debited the allowance account, and we ended up writing off more than we had estimated, so that it would end up changing the allowance for doubtful accounts balance from a credit to a debit, and that's the way that we would end up with a debit balance prior to adjustment.